Does confirmation matter for taking an entry? We're going to find that out today. I'm not going to tell you what I think. I'm going to show you the process of computer backtesting and figuring that out for ourselves. So welcome in, fam. Much love, Trav here. If you don't know me, I am a trader, and what I do is I use fundamental ideas to create trading systems that are turned into mechanical systems, and I computer backtest them, and I do A/B testing, and I figure out for a fact what actually works. No opinion, not a feeling, not a emotion. This is what the math and the computer says. So let's get into it. Now, if you're a nerd about trading, you're going to like this video. If you're serious about trading, you're going to like this video. If you're emotionally attached to ideas, you might not like this video. This is for people who are willing to change their mind and be swayed by statistics. So my methodology, I'm using PineScript, and I'm using TradingView strategy tester, and some people are critical of it, but you can go into the list of trades and confirm that works how you think it works, and if it does, there's no reason why you shouldn't be able to use PineScript strategy backtester for your backtesting. So part of my methodology, which is important, is I want to see the indicator work on the strategy, the system. It needs to work on metals, indices, and crypto. One problem that I've encountered personally, and you'll see a lot, is someone will post an amazing backtest in computer data, but it's only for a small slice in time in one asset, and it's not as likely to repeat into the future. So for me, if I see it worked on gold for over 100 years, and it worked on the Nasdaq for over 40 years, and it worked on Bitcoin for over 10 years, that's good enough for me, especially if it worked on other assets in those spaces. I'm not looking for the best possible results. I'm looking for generalized results that are robust and work across a lot of asset classes. So here, just to show you before we get into the testing, the green line is our system. The blue line is buy and hold. This is for the Nasdaq going back 40 years. We can go to gold. The green line is us, so gold crushes it. Blue line, you can't even see buy and hold, but this goes back over 100 years. And then we have Bitcoin as well, where we're reading buy and hold. Now, just to show you the system a little bit, and we're going to get into testing for confirmation, is one small thing we can control, is what the system is looking to do is to be long above the 200 SMA with no stop loss, with with no TP, but a trailing stop loss, buying on dips and buying on breakouts, pyramiding the position and advancing the stop on each breakout. So you can see we get in here and we just keep riding it up, riding it up, riding it up till we're stopped out up here, and then we're out. So that's how the system works. Now, in terms of confirmation, this is the confirmation that I like and that I use, and that does a daily close matter. So for a dip buy, we're taking out this old level and we're reclaiming it. Does it matter if we reclaim it and close, or is it good enough to just hit that old level and we buy? And the other one is for breakout buys. Is it better for price to close above the old high on the daily to be a buyer? Or is it okay if it just touches the old high and we have a limit order and we buy? So that's what we're going to test today. And we're going to test it using my indicator, Market Timing Pro, which is not just an indicator, it's a platform for testing a number of different strategies. You see we have the dip buy, we've got the breakout buy, we've got the failed breakout, and we have all kinds of parameters. We can set our TP, we can change the trigger for how we enter, we can set parameters around what the old high or low looks like. We have filters for the simple moving average. We can adjust our stop loss. So we can test a lot of different things. So what we're going to do is we're going to test the trigger for close, and we're going to look at the three main asset classes and make a determination. So right now we have gold, breakout buy, cross delayed. So crossed delayed on the breakout buy, the terminology is not great. This is a close above. So let's change it to touched crossed, which is just touching it and not waiting for a close. We'll see what happens. So right now our drawdown is at 32% with 11,000% profit. Okay. So our drawdown increased and our profit increased a little bit. So let's reduce the position size a little bit to try to get the same risk adjusted returns. So it's worse to just buy before confirmation. Why? Because right now our drawdown is a little bit higher and our profit is a little bit less because it was 32% drawdown with 11,000% return when we had our had it set to this. So the position sizing, wait, hold up, 29%, yeah, 9,000%, yeah. So we always want to compare with the max drawdown and have the same max drawdown and see. So we'll come back and we'll test dip buy, but so we have one down. Now let's look at gold and see if it matters, how much it matters. So right now we have a 40% drawdown with 256,000. Let's just to make it easy, set the max drawdown to 50%. I need to play around with the position size a little bit to get there to figure out, but we want to compare from a 50% drawdown. We'll compare from a 50% drawdown. Okay, so 50, 52. Okay, 50% drawdown is an 870,000% return. Pretty amazing. Now our risk reward, trailing stop. Let's look at this. Dip buy, breakout buy. So let's set this to touched. So it's at 870,000% with a 50% drawdown. Touched. Hold on. Touched is saying 3,000,000% with less drawdown. Is it better? Interesting. Now for crossed, I wonder if it matters if we change this. Would it be better? Okay, but still, if we go from touched actually is seems to be better on gold by a lot. The drawdown went less and it went to 3 billion. So this is why like okay, it's saying for gold, confirmation doesn't matter. So now let's go look at the chart and confirm. I want to find a trade, confirm it's working how I think it's working. I want to see it on the chart showing a trade where it, yeah, so here would be an example of a breakout long where this didn't have confirmation, right? Because it didn't close above. In theory, it's a failed breakout. But we added on and it worked. We end up holding it until this one gets stopped out all the way up here. And part of it is maybe because it's more opportunities to advance the stop. Actually, so this is a problem because in theory, one of the advantages to not waiting for confirmation here is how the stop loss advances. But yeah, I like that. That's very interesting. So that's something, yeah, opens more questions. But yeah, okay, we're saying for gold, maybe actually you don't need confirmation. Now let's go to Bitcoin. Is the last one, and then we're gonna do dip buy. So uh well we have yeah, okay, we've got dip buy enabled at the same time. So right now, we'll set the position sizing down to get the drawdown to around 50% and then compare. Okay, so drawdown 50%, net profit 30,000%. Okay, now let's see what happens if we change this to touched. So it was 30,000%. We need to reduce our position size to accommodate for the increased drawdown. 40,000%. So it's saying for Bitcoin, actually, confirmation is not the way to go. This is surprising me. If it just hits you buy, right? Because it was at 30,000%. We're at 60,000%, right? It kind of doubled our gains. We need smaller position sizing to adjust for more losses, but it seems to improve things, yeah. Wow, that's not what I expected, but this is why we backtest. It did matter for US 100 though, right? Let's look at the dip buy now. Okay, let's go look at dip buy. One of the reasons why not waiting for confirmation might be better though is because of there's be another way to test it, which I might come back to. But the way it advances the stop loss is it advances the stop loss more times if it doesn't wait for confirmation, and that could lead to more profitable trades. Okay, so now let's look at just the dip buy. Let's set the drawdown to 50% and compare. And the dip buy right now, okay, 52%, close enough. So let's set it to touched. It was at 4 million%, right? Wow, way worse. So right now it's at, sorry, 4,000% with a 50% drawdown. If we set it to touched, it dropped all the way down to 660%, which is kind of crazy. Also, the drawdown went down, which, yeah, I mean, it's much worse. Okay, so waiting for confirmation. And just to look, so what it should show is on some of these dip buys now. Yeah, it just buys the low before waiting for reclaim. And it's saying waiting for the reclaim is really important. I don't know why it's not taking along right here. It should take along right here. Maybe this one is too old is why. Okay, that's why in the settings. Okay, so it looks like confirmation on the dip buy is so far is more important than confirmation on breakout. Like it was a huge difference. So let's look at gold. So we're on the dip buy right now. Let's set the risk to 50% drawdown. If we can. Gotta play around with it. 52% good enough. 43,000% is our return with the 50% drawdown. Okay, so once again, it's 40,000%. So the drawdown is much bigger, is the first thing I notice. So let's set it to 40,000%. Wow, why is the drawdown so bad? Timed out, what's going on? Okay, 40,000%. Did it reset? No, touched. Okay. So interesting for gold is actually it's doing better off of the touch than a recovery. So that's also not what I expected. where let's find an example to show you. Um, Here's an example where it just buys. It doesn't wait for a reclaim, but it's saying it gets better results, which is kind of shocking to me, but it is what it is. Here's another one. Maybe the problem, no, within 10 days is the setting. Okay. Surprising. So the last one is Bitcoin that we need to look at. It just buys the low. It's kind of over the 200 SMA is kind of crazy. Find another example. Wow, those shorts are working really good, right? Look at these two shorts. Wow. Okay. Let's see what dip buys happen. It should just be a buyer there now. Yeah, okay. Okay, well, let's move on to the last one, which is Bitcoin, and see. So Bitcoin right now has an 876% drawdown. So let's set that to 50. Okay. So right now we're with touched, so no confirmation. It's giving us 800%. Let's look 500%. So according to this, confirmation doesn't matter, which is kind of shocking to me. It's really shocking to me. But this is why we don't go on opinion, we go on backtesting. Um, wow, look at that. How much the drawdown's the same and touched improves. So yeah, that's kind of shocking to me. So based on that, it raises more questions, but from what we saw, you don't need to wait for a daily close. You just go in. Crazy. Okay, hope you find that interesting. I know that I did. Keep coming back for more updates, and if you want to use the indicator for yourself and be a part of our private group, there's a link down below to how you can do that. Appreciate you, much love, talk to y'all soon, and peace.